Hello, students. All of you, welcome to the Rapid Revision Route. So, today we are going to revise the topic Composition Scheme. Yes, Composition Scheme, section number 10. So, first of all, let me introduce what do you mean by the composition scheme. See, there are many small taxpayers and many small business persons who are paying tax or doing business. So, to encourage a small business person or small taxpayers, a composition scheme has been reduced to charge a very lower rate of tax as compared to the normal scheme and provide less procedural documentary work to such small business person or small taxpayers to encourage their business and to encourage them to do more and more business. So that's why this scheme has came into effect. Now, continuing with the provisional part of this scheme, composition scheme section number 10. Now, there are two types of composition scheme, for goods and for services. Now, first of all, we are going to understand the composition scheme for goods. Now, section number 10 1 applicability. In case of composition scheme for goods, check the applicability first. Who can apply for the composition scheme? The person, the registered person whose aggregate turnover, the registered person whose aggregate turnover in the preceding financial year, the registered person whose aggregate turnover in the preceding financial year is not exceeding 1.5 crore rupees. It means the aggregate turnover of the preceding financial year was 1.5 crore or less. That registered person can apply for the composition scheme. This 1.5 crore limit becomes 75 lakhs in case of some special category of states. Which are those? Meghalaya, Arunachal Pradesh, Nagaland, Uttarakhand, Mizoram, Manipur, Tripura, Sikkim. You have to learn this. Yes, you have to learn this. Now, how can you remember this in a short way? See the first letters MANU. Manu. Manu has booked ticket for Sikkim on MMT. Manu went to Sikkim from MMT. Yes, this is the short way to learn this. Now, continuing with the portion. Sir, here's the word aggregate turnover. What do you mean by the word aggregate turnover? Yes, see here, aggregate turnover. It is a pan based turnover, a turnover on single pan basis all over India. First of all, there are all types of taxable supplies. There are all types of taxable supplies either made by own or on behalf of others. Plus, all type of exempt supplies. Where we are talking about exempt supplies, it includes nil rate, wholly exempt, and non-taxable. Yes. After that, export supplies plus interstate supplies plus value of supplies made by registered person from 1st of April to the of the financial year to the date of registration the composition scheme. See what happens in this case. We are making judgment of aggregate turnover on the basis of previous financial years. Yes, last preceding financial year we are making the decision of aggregate turnover on the basis of that year. Now here, when you are opting for a composition scheme and when you want to register in composition scheme in the current year also, from the date you apply for the scheme up to that date, from 1st of April of that current year, that turnover is also added to the turnover of the preceding financial year. So this is that thing only. The turnover from 1st April of the financial year up to the date he becomes liable for registration, that period also is going to be counted. The turnover of that period is also going to be added in the preceding financial year aggregate turnover. So these things are to be added in the aggregate turnover. See, this definition of aggregate turnover I am telling you from the perspective of the whole act, not for composition. It is from the point of view of the whole act. What things are not needed in composition, we can remove it afterwards. Next, what things we should exclude from the definition of aggregate turnover? From the definition of aggregate turnover, we should exclude inward supplies in RCM. Reverse charge mechanism. Yes, because that's not your turnover. That is the turnover of the person from whom you have received the supply. You are paying the tax on their supply in under reverse charge. but it's not your turnover. It's them turnover. Yes, it's their turnover, and your turnover should not be included. Yes, in your turnover, RCM should not be included because it is the turnover of the supplier for which you are paying tax under reverse charge. Also, taxes and GST should not be included. Yes, if anything is given like 1 lakh turnover inclusive of taxes, so from them you have to separate the tax amount and the non-tax portion of turnover. So here we are going to consider only that portion of turnover which is exclusive of taxes. And again, the last term, services of extending deposit loan advances in so far as the consideration is represented by way of interest or discount. This thing I am going to explain you later. Yes. So this is the definition of pen-based aggregate turnover. So that aggregate turnover, if less than the prescribed limits, then the person can apply for composition scheme. Along with section 10.1, the person applying for a composition scheme should also keep in mind the second proviso to section 10.1. The second proviso to section number 10.1 talks about permitted marginal supply of service. See, in this modern time, no person is there who will not supply service along with goods. Now, as of in this modern time, supply of service is complemented with supply of goods. Either it may be 1% of the whole supply. The supply of service is 1% of the whole supply. You will supply service also along with supply of goods. Every nature of business, you will do this. Now, when we are talking about composition of goods, there should be a supply of goods. But then also we are allowing you some marginal supply of service. Yes, you can supply service, but up to a specified limit. See the limit. The limit is higher of 10% of the turnover in state or 5 lakhs. Higher of 10% in the turnover in the state and 5 lakhs. Turnover in the state, in the definition of aggregate turnover, you are calculating in the pan basis all over India. But if you limit it to the territories of a particular state, it will become the state turnover. So, 10% of that state turnover the preceding financial year or 5 lakhs, whichever is higher. Say, for example, the preceding financial year state turnover was 70 lakhs. 10% of this will be 7 lakhs. Whichever is higher, 7 lakhs will be higher. So the permitted amount of limit of services is 7 lakhs. If your services along with supply of goods are within this limit, then okay. Otherwise, you will not be eligible in section number 10.1 for the composition scheme. Now, while calculating the marginal supply of service, we should note two things in mind. We should keep two things in mind. First of all, restaurant services. As though it is a type of service, but under composition, it comes under goods. So that's why while calculating marginal supply of service, we have to reduce this service. We have to ignore this service. First one that. And second thing, read this service. Service of extending deposit loans advances in so far as the consideration is represented by way of interest or discount. The same thing as we were reading below in the definition of aggregate turnover. That same thing. Now here it is telling that while calculating the marginal supply of service, while calculating the aggregate turnover, while calculating the state turnover, and while calculating the service allowed, you should ignore this type of service. Yes, you should ignore this type of service while calculating these four things. So this is all about a composition scheme for goods. Now, coming towards composition scheme for services. Section 10.2a applicability. Section 10.2a composition scheme for supply of service is applicable only in the case when the registered person is not eligible to opt the scheme under section 10.1. Yes, in this 10.1 is not eligible to opt. First condition, and second is aggregate turnover in the preceding financial year has not exceeded 50 lakhs. These are the two conditions in case of services. Now, as of in case of goods under section 10.1, there was a limit of marginal supply of service. Say goods plus service. There was a limit on service. Now here when you are supplying service plus goods, is there any limit on goods? There is no limit on goods. There is no limit on goods. Now the rates, you can have a look on the rates. If for the case of example of goods, manufacturer 1% means half percent. Restaurant 5% means two and a half percent. Others 1% means half percent of CGST or SGST. And in case of services, the rates are 6%, that is 3% and 3% CGST, SGST. So these are the rates under composition scheme. So these are the rates under composition scheme. Now, coming forward, section 10.3. What section 10.3 says? It says that agreed that you have seen that preceding financial year turnover is not more than the prescribed limit, that is of 1.5 crore, 75 lakhs or 50 lakhs as the case may be. But you have to also take care of that in the current financial year when your composition scheme is going on, in that period also your aggregate turnover should not cross the prescribed limit. So you have to check of the preceding financial year also and the current financial year also of which you have opted the composition scheme. So both the turnover you have to check. That is section 10.3. 10.4. Other condition. Composition dealer cannot collect a tax. Composition dealer cannot collect tax on outward supplies. Composition dealer is not eligible to claim ITC. No ITC will be given. And composition dealer cannot issue tax invoice. No tax invoice. What he can issue? Only bill of supply. And if any provisions are been misleaded, fraud or any other cases, say you have crossed the limit, then also you are paying tax under composition scheme, and if the proper officer caught that thing, penalty provisions will be attracted. Yes, that is section 10.5. So this is all about the eligibility and the sections. Now, what things you should take care of before opting for composition scheme? First of all, non-taxable supplies should not be done. You should not be a supplier of non-taxable goods. Yes, no interstate outward supplies of goods or services. No interstate outward supplies. Sir, interstate inward supplies can be done. Yes. You can have inward supply, but no outward supply of interstate nature will be considered for composition scheme. Not eligible. Now, third one, person supplying any services through eco who is required to collect tax at source under section 52. Now, the person who is required to make registration under section 52 only for the purpose of TCS, that eco, and the supplier who is supplying through that eco cannot opt for composition scheme. He is not eligible. After that, CTP and RTP are not eligible for composition scheme. And lastly, manufacturer of notified goods in case of goods, and manufacturer or supplier of notified goods and services. Now here, what are the notified goods? Ice cream, pan masala, tobacco, aerated waters, flash bricks, flash aggregate, fly ash blocks, bricks of fossil meals, etc. etc. This notified goods manufacturer cannot opt for composition scheme in case of goods. And when we are talking about services, manufacturer as well as the supplier also of this notified goods cannot opt for composition scheme. Now this is all about you should take care before opting composition scheme. Now what should be taken care of after opting composition scheme? After opting composition scheme, you have to comply with these conditions. Number one, the 9394 tax shall be paid separately, not under the composition scheme. Sir, 9394, these are the reverse charge scheme. Yes. Under reverse charge scheme, if any taxes is being paid by the recipient, other than the composition scheme tax, then this tax amount should be differently calculated and paid, and composition scheme tax amount should be differently calculated and paid. Neither he can become a CTP or NRTP. Yes, he shall mention the words on the invoice, not invoice, bill of supply. He cannot issue tax invoice but can issue bill of supply, and on the heading of that bill of supply he should mention that I am a composition taxable person and not eligible to collect tax on supplies. Not eligible to collect tax on supplies. And also on his signboard or notice board, he should mention that he is a composition taxable person. Yes, this is all about who is eligible or not. Now, opting for composition levy. Now, there are two cases. Case number one, unregistered. Case number two, registered. Now, for example, an unregistered person today became registered. Today he became liable for registration. Today he crossed the threshold limit. Yes, today, just now, he crossed the threshold limit. Now, he will apply for the composition or the regular. When he put the application for registration, at that time only he should intimate the proper officer whether he is going to opt for composition scheme or not. If at the time of registration itself he opts for composition scheme, then the composition scheme will be effective from the date of registration itself. Yes, from the date of registration itself. Whenever the registration process may be, whenever he get the registration from that day, he can enjoy the composition scheme. But what if he is already registered and he want to shift from normal scheme to composition scheme? If this is the case, then whenever he may apply for the composition scheme, the effective date will be the 1st April of the next financial year. Say this is the month of August and now I am applying for composition scheme. Then my composition scheme will be effective from the next financial year, 1st April. Got the point? So this is all about the intimation. Now withdrawal. Say you when the scheme will be withdrawn, the scheme will be withdrawn in case number one. If you contravene any provisions of the act, yes, then it will be withdrawn from the date of intimation by that taxpayer voluntarily. Voluntarily it may be withdrawn that you don't want to continue under composition scheme. You can voluntarily apply for withdrawal of that scheme. In that case, the effective date will be the date of application, and the proper officer may forcefully tell you to withdraw. Yes. So in that case, the date determined by the tax authorities will be the date of withdrawal from that composition scheme. So this is all about a revision of composition scheme section number 10. We have completed it. So meet you in the video clip of the next revision video. Up till that, bye bye to all of you. Hello students, I am here with an announcement again for the regular batches. Our CA Intermediate Taxation regular batches are starting from 21st of September, and CA Foundation all subject regular batches are starting from 25th of September. And this all batches will be in 100% English languages. Yes, 100% English language and at a very shocking price. You want to know the shocking price? You want to know the early bird discount? You want to know anything about this batch? You may contact on the given number on the screen. Yes, up till that, meet you in the regular batches. Bye bye to all of you.